Steve Brown, and this is the weekly Volatility Roundup from CMC Connect. There were a number of high-profile stocks posting elevated levels of price action last week, with US earnings season being a key driver. Bank of America was one such example, with shares coming off sharply at the start of the week despite better-than-expected Q1 revenues being posted. Instead, the market focused on the increase in costs and bad debt provisions, knocking sentiment in the short term, although the downside proved to be limited in duration. The stock ultimately ended the week ahead with one-week vol of 55.89% against 36.5% for 3 months. Concerns over rising tensions in the Middle East last week saw Japan's Nikkei 225 index slide back to levels not seen since early February. A degree of support for the yen also contributed here, as the currency found resistance against the greenback just below the 155 level, pushing one-week vol on the Nikkei out to 23.49% against 16.95% for 3 months. Geopolitical uncertainty, fears over inflationary pressures, and analysts chat that a number of metals prices could still have further to rise left the asset class looking active. One leading US bank floated the idea that gold could break $3,000 in the next 12 to 18 months, and whilst that's 25% up from recent highs, it pales against the 20% gain posted since mid-February. One-week vol on gold stood at 20.86% versus 14.41% on 3 months, while silver printed 37.58% on the week and 27.81% for 3 months. And the Swiss franc saw a flurry of support in the early hours of Friday morning after investors briefly sought out safe havens in the wake of the Israeli missile attack on Iran. The event was evidently more constrained than had been feared, with the CHF spike being short-lived, but it was still sufficient to leave one-week vol on Euro/CHF at 8.54% against 6.25% for 3 months.